Well, good morning. It's me, Kenny Polcari. Today is Wednesday, July 5th, 2023, and I am coming to you live from Cape Cod, and we'll be here for the next month or so. So pay attention because we're going to have a lot of fun. In any event, what is happening and what are the things you need to know about what's happening in the market and what do we expect for today and the end of the week? Well, it was a great 6 months. Right? The first half of the year. So the question now is, what will the next 6 months bring? And tech was the biggest winner, as you know, while energy, last year's darling, was this year's or is this year's biggest loser so far. The Fed minutes are due out at 2 p.m. today, and what will we learn, if anything new? Friday, we're going to get non-farm payrolls, and you know how exciting that always is. And what do we have for dinner tonight? Well, we're having the chicken Scarapiello, so it's a great summertime barbecue family dish. Okay, so welcome to the third quarter of 2023. The first half of the year is now history. The NASDAQ was and continues to be the winner in 2023, and it ended the first half of the year up 33%, while the transports and the S&P 500 added up 16% apiece. The Russell gained 7%, while the Dow Industrial struggled to add 3%. The second quarter, right? A quick recap. The second quarter began with the market still in the throes of the regional banking crisis, followed by the March failures of the Silicon Valley Bank and Signature Bank, and investors started the month of April wary of those contagion risks, right? Those concerns proved to be mostly overdone, however, as throughout most of the month, regional banks ended up being stable. That stability allowed investors to refocus on corporate earnings, and the results were much better than expected. 78% of the S&P 500 companies reported better than expected first quarter earnings, a number that was solidly ahead of the 66% long-term average. Additionally, 75% of reporting companies beat revenue estimates for the first quarter, also well above the long-term average. The solid corporate performances were a welcome sight for investors, and coupled with the general macroeconomic calm, allowed stocks to trade higher throughout most of April. However, following an underwhelming earnings report, concerns about the solvency of First Republic that weighed on the markets late in the month, and the S&P 500 declined into the end of April to finish only with a modest gain for the month of April. Fears of that First Republic Bank failure were realized on May 1st as the bank was seized by regulators and the FDIC was appointed as receiver. However, that same day, JP Morgan did announce that it was acquiring the bank from the FDIC, and that helped to calm investor anxiety and calm the markets about the financial contagion risks. The Federal Reserve also helped to distract investors from the First Republic failure as the Fed continued to hike rates going into that at their May 2nd FOMC meeting. But importantly, they altered their language in the statement to imply that it would pause rate hikes at the next meeting, which was in June. Instead, the tech sector helped to push the S&P higher into mid-May, thanks to the explosion of investor and financial media enthusiasm around what else? Artificial intelligence, which was highlighted by that massive rally that we've seen in names like NVIDIA and C3.ai following their strong earnings report. However, like April, the end of the month did see some increase in volatility and investor concern. This time it was the lack of progress on the U.S. debt ceiling extension and rising fears of a debt default, which, by the way, was never going to happen. In late May, May 28th, to be exact, and as expected, Joey and Kevin did agree on a 2-year debt ceiling extension, which got signed into law only 48 hours later, avoiding that financial calamity. The S&P 500 did finish May with a slight gain. June began with the debt ceiling resolved, talk of a Fed pause, and continued stability in the regional banks, right? Seeing investors jump back in, causing the rally in stocks to resume. Inflation declined as the CPI hit the lowest level in 2 years. Economic data remained impressively resilient, reducing fears of a near-term recession or even a crash landing. Then in mid-June, the Federal Reserve confirmed market expectations by pausing rate hikes, and that helped fuel a broad rally going into the end of the month. And saw the S&P 500 move up and through 4,400 and hit the highest level since March of April 2022. The last 2 weeks of the month saw some consolidation of that rally, thanks to some mixed economic data, political turmoil in Russia, and hawkish rhetoric coming from global central bankers. But the S&P 500 did finish June with strong gains. So everybody should really be happy when you open up your quarterly statement. And some of the markets were impressively resilient in the second quarter and throughout the first half of 2023, as better than feared earnings expectations for less aggressive central bank rate hikes, more evidence of a softer economic landing, and relative stability in the regional banks pushed the S&P now to a 14-month high. All very exciting. Of the broad 11 S&P sectors for the first 6 months, tech was way out in the lead, climbing 39%, right? Communications, XLC was up 36%. Consumer discretionary, XLY was up 33%. Industrials were up 9%. Basic materials up 7%. Real estate was up 2%. Consumer staples eked out a 1% gain, while financials lost 1%, healthcare was down 3%, utilities down 6%, while energy, last year's darling, gave up 7% in the first 6 months of this year. Further down the scale, we had disruptive tech, right? ARKK, the Kathy Woods' ARK, was up 44% for the 6 months. Semis, the SOXX, up 47%. NVIDIA was up 190%. Airlines, right? The Jets ETF was up 26%. Housing was up 32%. Aerospace and defense up 4.5%. Biotechs were flat. Hotels up 25%, metal and miners up 3%. American industrial renaissance names, AIRR is a symbol, up 23% year to date. While last year's darlings in the coal mining energy space disappointed, falling nearly 15% across the board. We had the value trade, the SPYV, up 11%, while the growth trade, SPYG, up 20%. As expected, the dollar ended the quarter higher, up 1.2%, leaving it at 103.04, below the highs of May when we saw the dollar index trade up to 104.32. This morning, the dollar's ticking higher on the idea that the Fed minutes due out today are going to prove that the Fed is for higher rates in both July and September. And higher rates will make the dollar more attractive, so expect to see the dollar challenge those earlier highs. Oil traded higher on Monday and Tuesday, and this morning it is up another $1.42 a barrel at 71.20. We're now kissing trendline resistance at 71.44. The question is, will we break through or will we back off? The Saudi production cuts went into effect on July 1st, and the UAE energy minister told reporters that additional cuts will be enough to help stabilize and balance the market. We have already had a few analysts now predicting to see WTI trade at $85 a barrel before the end of summer. I think that's a stretch, but let's see. Gold, which tested long-term trendline support at $18.99 last week on the idea that the Fed is going to keep raising rates, is now up $7 after bouncing off that support, trading at $19.36 an ounce this morning. Once investors get okay with where rates are going, then gold investors can decide what proper valuations gold should be trading at. As I said, I did expect gold to test the trend line, which it did, and now I suspect that we're going to churn in this 1900, 1975 trading range for a while until we see what gold does and what the economy does, what the Fed is. U.S. futures this morning are down. Not a surprise. The Dow down 136, the S&P's down 18, the Nasdaq's down 100, while the Russell's down 13. It is the first full trading day of the quarter. Eco data today includes factory orders expectations up 0.8, durable goods expectations up 1.7%, and at 2 p.m. you're going to get the FOMC minutes from the June meeting. And the question is, what will we learn? Is there anything new? I say nothing new. Yes, they paused, but expect rates to continue to rise at the next 2 meetings while inflation is coming down. But remember, prices are still going up, just at a slower pace. And if you live anywhere and you go to the supermarket or you pay a utility bill, the idea that prices are weakening is just not true, right? Weakening prices is called deflation, and that is not happening yet. In fact, the Cleveland Fed now forecasts that their data shows inflation is going to reaccelerate in July. And that confirms what JJ's been concerned about and what I have actually been saying for months now, right? Would we see a repeat of the 1980s where they paused, thinking that they conquered inflation, only to find out that they were wrong, and then it then forced then Fed Chair Paul Volcker to jam rates significantly higher, sending the U.S. economy into a 2-year deep recession. Let's just hope that's not the case this time. The next hurdle for the markets is going to be the start of earnings season, and that begins officially on July 14th. Expect all kinds of pre-announcements in the next couple of weeks and analyst revisions in the days ahead. Remember, companies that are going to disappoint need to forewarn or pre-warn investors who won't be happy and who will take some money out of the stocks, right? But that's versus the ones who choose not to say anything and then they wait till earnings day, and then they risk getting absolutely slaughtered on earnings day. And remember, the earnings are history. It's really all about the forward guidance, so pay attention to what they're saying about the next 4 to 6 months. European markets this morning are all lower, down about 0.5% across the board. Again, should not be surprising. PMI figures for the Eurozone fell for June as the economy ground to a halt, they said, and the survey detailed weaker demand and new orders from the manufacturers. And don't forget, it is the start of the new quarter, and markets across the zone did end the first half of the year higher, like we did, with 5 of the 6 regions up more than 14%. The UK is the only region that underperformed, that was actually up by less than 1%. Weakness in the indexes today and maybe this week should not really surprise anybody as investors prepare for the start of this new quarter. The S&P ended Monday's shortened trading session up 5 points to end the day at 44.55. Last week, I did say that the S&P appeared to want to test that level. We did, and then some actually, right? 44.50 was the level. We ended up at 44.55. The question is what happens next. Do not be surprised to see a pullback ahead of the Fed minutes, right? We're expecting those minutes to reveal higher rates in the coming months, and that should not be a surprise. The surprise will be if the minutes reveal an even more concerned Fed, suggesting that we could see higher rates into the fall, October, November as well. Not something I expect to see, but it is always a possibility. Look, don't forget, Friday will also bring us the all-important non-farm payroll report, and that is expected to show an increase of 225,000 new jobs and the unemployment rate to go down to 3.6% from its current 3.7%. Average hourly and weekly earnings are going to remain higher. And while that all sounds good, it's not good for the current Fed think and monetary policy, because it puts more pressure, continues to put pressure on higher prices. Look, remember, stick to the plan. Do not make emotional decisions. You can find my quarterly commentary, my recap and my forward guidance for the third quarter on my Twitter, on my LinkedIn profile. You can also find it on my Substack, which is kennypulcari.substack.com. You can also just email me and I'll send you a copy if you prefer. Okay, so what are we having for dinner today, right? We're having the chicken Scarapiello, which is actually a great dish. It's a great dish for a large family gathering, a barbecue, or just for dinner. It's a classic Italian dish. And there's so many ways to make it, so this is about being creative. Remember, as long as you have the basics down, you can make it your own by improvising the seasonings and etc. So try this one. It's easy, it's very good. And it's simple to make, and it will become a family favorite. In fact, I might make it tonight as I think about this. Anyway, for this you need chicken pieces. You want them on the bone. You want legs and thighs are always the best. The dark meat is always tender, juicy, and moist. You need sweet Italian sausage. You can use hot Italian sausage if you prefer. I need sweet cherry peppers. Again, you can use hot if you like. You need potatoes, you need garlic, olive oil, salt, and pepper. You need Italian herb seasoning. You need red wine vinegar, a white wine chicken stock, and naturally cut Italian parsley. Now you want to start by preheating your grill and preheating your oven to 475 degrees, right? In a roasting pan, you want to take the potatoes, you can slice them, quarter them, cube them, whatever you want to do. Season them with salt and pepper, some Italian herb seasoning, drizzle them with a little bit of olive oil, toss them, put them in the pan and roast them in the oven for 25 to 30 minutes, stirring them occasionally just to move them around. After 30 minutes, take them out of the oven and wait. Now, in a separate pan, you want to wash the chicken, dry it with a paper towel. Season the chicken with salt and pepper, and if you want, some Italian herb seasoning. You can just do the salt and pepper, but it makes it easier. On medium-high heat, in a saute pan, add up some olive oil. So add some olive oil, put it in the pan, bring it up, get it really nice and hot, and then you want to put the chicken pieces in skin side down first. Don't crowd it because it draws the heat out of the pan. So you can repeat this process, right? You want to just make it golden brown, turn the pieces over. The trick is to just get them nice and brown before turning. You should be thinking maybe it's 4 to 5 minutes per side, right? But watch this because you know your own stove. When it's brown, remove the chicken and place it in the roasting pan with the potatoes, arranging it all nicely. Now, put the sausage on the grill. The trick is just to get the sausage the grilled flavor, right? Stay close to it so you don't burn them, turning as they cook. When they're almost done, remove them, bring them in the house, slice them into bite-sized pieces and add that also to the roasting pan. Now, go back to your saute pan, add the chopped garlic to the frying pan, saute till it's nice and golden brown, making sure not to burn it. Now add in the sweet cherry peppers, right? Cut them in half, remove the seeds, saute them around a little bit. Now add in a 1/4 cup of the red wine vinegar. Allow it to come to a boil. Scrape the sides of the pan to release any of the brown bits, right? You're like deglazing the pan. When the vinegar is reduced, add in the dry white wine. Do not use a Chardonnay. You know me, I use the Pinot Grigio Santa Margherita, like maybe a 1/2 cup or so. Bring it to a boil, reduce it by half, right? No longer, maybe it's 4 minutes max. And if you want a thicker sauce, feel free to add a little bit of flour here to thicken it up. Now, once the wine is reduced, you want to add about 1 full cup of chicken stock, right? Bring it to a boil, stir it, bring it to a boil, remove it from the heat. Now pour the whole thing into the roasting pan over the chicken and the sausages and potatoes, right? Don't drown it. You want it just enough so it's all bathing in the sauce. Place it back in the oven and bake it now for 30 minutes uncovered, right? After that, 25, 30 minutes max, right? Take it, remove it from the oven, toss in the chopped, sprinkle the chopped parsley on top, and now you want to serve it. It makes a great summer cookout dish because you can make a lot of it relatively easy, right? Everyone will love it. It presents really nicely on a family-style platter, accompanied by maybe a large mixed salad and a green vegetable of your choice, and you are good to go. Trust me, you will enjoy this dish. It's not difficult to make. It will become a family favorite. In any event, the day is just about to get started, and it is proving to be another exciting day in the markets as the third quarter gets started. So until tomorrow, take good care.